the outlook for where we may go forward. We see the open in Asia today, Brent trading up. The contract obviously shifted. It is the 1st of February, and the new contract is now trading at 89.57 on Brent, and the NYME WTI at 88.47. So only $1 between Brent and WTI, which over recent months and years has been much wider than that. Let's kick off this morning with our regular commentator. Welcome back all of our three commentators into 2021. It is February 1st, perhaps a little bit late to say Happy New Year to you all, but Happy New Year nonetheless, and thank you so much for joining us. Let's kick off with Kate Durian, Me's contributing editor and non-resident fellow at the Arab Gulf States Institute in Washington. Kate, of course, amongst many experiences in her career, is a long-standing OPEC correspondent and analyst. And Kate, OPEC meeting this week. Is there any other decision they should consider than simply rolling over their stated 400,000 barrels per day per month increase?
Oh, good morning, everybody. It's a bit too early to even think about OPEC. I think they're meeting tomorrow. But I think they're meeting tomorrow. My personal opinion is that they won't change anything. That they will just, go along with the policy of increasing by 400,000 barrels a day, even though they're missing their target. But as the Saudi minister said a few months ago, he said, nobody's going to eat anybody else's cake, so we're just going to stick with it. The price, they don't seem to be that worried about price. And they will say, it's not really just about fundamentals, it's geopolitics and all other issues that are affecting the price, and everybody expects that there will be a surplus in the first quarter. So it'll balance out later in the year, but for now, it looks as if they'll just keep the ship steady.
Kate, just a quick follow-up on that. Is there any credibility issue at risk by doing so? I mean, we just had the monthly report out for January that they're way below the targets that they have put out there as the group's objective. Do they risk credibility issues, or they've garnered a lot of credit that they can spend it now?
I don't think so. I mean, they have managed to keep the market supplied. They've managed to balance it after a huge shock in 2020. So I don't think they're going to change course just because there is a slight change in demand. I think they underestimated demand a while back, but now that they've got this policy going, I don't think it's not going to be very easy to reallocate quotas, given that some people are going to ask for more, for a higher baseline. I mean, it just complicates things. I think they'll just keep it going. And if there's a need for more supply, then I think you'll quietly see some of the producers sort of shipping a few extra cargoes. But I don't, that's my personal opinion. I haven't spoken to anybody, but as far as I can tell, it looks like there won't be any change, and they're not really worried about credibility issues.
Andy Lavin, Chief Operating Officer, Sahara Energy Resources. Andy, amongst the many, there's a lot of noise around this market at the moment with geopolitics in particular, but nonetheless, on the supply-demand fundamentals, this appears to be a very tight market that is the sort of floor as to why we are at these levels. What are your thoughts on that from a purely fundamentals point of view? And also the 6-month backwardation that's in the market is quite significant.
God, New Year's catching up on me. I'm unmuted. So I would say that there is nothing in the fundamentals that tells you that price should be coming down. There's an enormous amount of just general floating up of the price. And it's been like that really for the last 6 months. If you look back, prices have blipped down and then they've started going back up, blipped down, started going back up again. I think the geopolitics that Kate referred to is all part of that currently at the moment. There is so much going on across the world that is doing nothing but pushing prices up. I noticed, I was on the radio this morning, the gas prices in Dubai have gone up 10%. 11% if you have to buy the special, the 98 grade. But
are you talking about gasoline at the pump?
Gasoline, yeah. So I would say the fundamentals are the world is getting back to normal slowly, and everything else around it, the geopolitics, is almost colluding to give this sense of it's going to go up, it's going to go up, it's going to go up. Is it really tight? Oh, that's a tough one. I think in some places it's tight. I don't think in other places it's tight. I think what you've got is you've got the developed countries coming back quicker because of all the vaccinations and because they're democracies, and therefore they want to do what they want to do. Therefore, they want to go and drive and they want to go and use energy. So you've got a probably an increased bifurcation of the demand. You look at places like Africa where you haven't got that. I think that's not growing anywhere near as fast. So it's very much a variable situation in terms of, is it a tight market? But the reality is the developed world is what drives the oil price.
And it looks vibrant. Walter Simpson,
Yep.
Managing Director of CC Energy Development in Oman, an independent operating oil company in Oman. Walter, are you rushing out to the fields to drill more holes? Is this, like Kate just said, OPEC plus underestimated demand recovery? You're part of the long string that is OPEC plus, a little piece of that. Is this a time to be drilling holes? Is this a missed opportunity by producers in some regards?
Good morning, Sean, and yeah, thank you for the nice question to start off with. Yes, it is a time to be investing in. Clearly, look, I'm with Kate in terms of, I think the system that OPEC are using at present, it's working. Why get off a winning horse? Keep going. I think Andy's point about the fundamentals saying everything's pushing prices up, I'm aligned with. So why wouldn't you be investing right now? If you've got the ability to add to your production, there's a market out there and a good price for it. So it's a good investment. And so I'm sure that every operator around the world is looking at that at the moment. And I suspect that's what's behind the increase in US production. We always knew that we were going to get production back in the US if the price was right. And I think it is. So simple answer to your question is, yes, it is the time to be drilling more wells and increasing your production if you have that ability.
And just to pick up that last few words, if you have that ability, given the sort of stress of the supply chain in recent times and across all sectors, but also oil production, inevitably the big squeeze on oil service companies during the last few years, if one wanted to put the pedal to the metal, so to speak, is there a supply chain? Is there a oil services supply chain ready to kick into action, or is there actually fundamental hurdles to that?
I'd say there are hurdles to it. They're not insurmountable, but there are hurdles to it at present, definitely. Because everybody's looking to increase production. So everybody's looking at what they can do and where they can get stuff. And look, we're seeing it across the board with inflationary measures around the world. There's an increasing demand, and the oil industry is no different. There's an increasing demand. Supply chain has suffered. I know I've got problems right now with infections, and getting people is a real issue. And not necessarily people who aren't COVID positive. It's people who haven't been in close contact as well. So there are challenges around it at present, but I think they're short-lived. I think over the next couple of quarters we'll clear those away and start to be able to move forward. So yes, there are definitely supply chain issues at present.
Kate, they say, as they say, that there's no solution to higher prices but higher prices, and nowhere is that more relevant, I think, than where you're sitting in the UK. We're getting reports on the heating bills. I don't know if you got the heating on this morning or you've got a candle out, but nonetheless, there is very significant inflation on energy across Europe, and now with the Russian crisis on Ukraine, there is an effort to attract special, I'm not sure what they're expecting the Qataris to do in delivering of natural gas, but there seems to be a lot of noise. We had the Emir of Qatar in Washington yesterday. Your thoughts on where that sort of elevated price starts to impact demand and the outlook for the European energy crisis with saviors like Qatar potentially?
God, that's quite a lot.
Yeah.
To go back to the Oman issue, I mean, the OPEC and Oman, I
Yes.
think managed to go above 1 million barrels for the first time in a couple of years. That's probably because they're
But don't
also
tell anybody,
including
no.
condensate. Well, they're including no, but it includes condensates, which they're allowed,
Yes,
under the
that's true.
revised OPEC plus terms. And they are enjoying a bumpy year. I think their profits, according to MEES calculations.
You do not have CCED's accounts on your computer, I hope. Okay.
No. It's MEES. I
MEES, yes, of course.
We calculate that oil export revenues rebounded by around 80% to 576 billion in 2021. So it's the highest. Their revenues are the highest since the 1973 oil crisis. So that was another crisis. But we're now approaching a possible gas crisis. And Europe, yes, I think Russia, the whole situation with Ukraine, I mean, we were seeing a shortage even before, so the whole Ukraine issue is not new because Russia wasn't supplying more than their contractual volumes of gas. I think Nord Stream.
But we have seen on gas a destruction in demand. Companies, manufacturing industrials have shut operations due to the overwhelming cost. And where does that go on oil, do you think, at these elevated prices?
Well, I mean, also the gas, the high energy prices feed into other feed inflation products, because businesses are paying more and factories are paying more and industries are paying more for their energy. So I think that's what's feeding inflation. And that also is another thing that I think OPEC mentioned in their report, that is another risk. You've got the possibility of higher interest rates, because of the sort of inflationary pressure. So I think it's all of it is looking, you've got a lot of bearishness, but at the same time, the price doesn't seem to want to move. It is a very bullish market. You've got the possibility, but then the uncertainties. Iran may be coming back. If you read the latest reports about the talks in Vienna, the nuclear talks, it looks like they may be on the verge of an agreement, a return to the 2015 nuclear deal. So there's a lot of there's a lot of balls that
and if that was to happen, what's your own outlook for that? And is that, it seems on the surface of it, very bearish for oil prices, but is it? What's your own sense in terms of supply for the market?
Well, it would be normally, except that you have so many producers who aren't able to produce at their targets, let alone, as they increase production gradually. And that some of these baselines are a bit unrealistic anyway. So you've got a few countries that can increase production. You've got UAE, you've got Saudi Arabia, possibly Russia, but not by very much. Russia can't just turn on the taps. They've got declines. So I think it's sort of a two-track organization at the moment. With some able to produce more. You might find that Saudi Arabia and Russia can produce at record levels. You've got US production is rising. So I don't think we're going to see any solution. But on the gas front, again, gas, renewables were not replacing gas, were replacing gas, not coal. So you've got more coal burning. I mean, the whole system is very, very skewed at the moment.
It is, when you consider we're just a few months since COP26 and people are rushing to buy coal. Andy, you mentioned in your opening point that there's nothing identifiable to see where a downward motion in oil prices could go. What is your interpretation of the backwardation we're seeing in the market? What is that telling you? And as sort of the flip side of that, in terms of the weakness, i.e. China has a weak outlook, these higher oil prices could cause some demand destruction in emerging economies. But what does the backwardation tell you, and where are the risks?
So you kind of outlined them a little bit yourself there. So the backwardation, basically, all that says is that the sentiment in the market is that we will move to a position where there is oversupply, i.e. oil will be cheaper. Now, why will that happen? And you've outlined a number of them. As you ride up this curve and you see people finding it difficult to increase production, you can convince yourself that it's just a question of time. So you can see, as I said in the chat, Permian's now back up at above the levels of pre-pandemic. So you can see it takes time to bring wells on. So it's not that, for example, OPEC can't turn wells back on. It's just they can't turn them back on and have an impact tomorrow. It's going to take time. So essentially, everybody's pricing into the future the return of OPEC to a lot bigger production, the return of Iran to putting more oils into the market. And it's just being pushed further and further into the distance as the oil price continues to rise up. And that's just the dynamics and of the market is saying, well, but in the future, surely everything's going to get back to normal, and therefore the price will be lower.
Walter, the outlook for the OPEC Plus, obviously, as we said, you're on a long piece of that string. I mean, failing to meet the current production increases, I think the calculation by most independent analysts is over since August. It failed to deliver close to 1 million barrels a day, about 750 or something like that, 750,000. The continued announced increases, I would think for countries like Oman and many others, there's already pumping at the maximum. Where does this go from the point of view of every month increasing and yet not being able to meet that increase from the point of view of the structure of this agreement? Has it run its course?
Look, I don't think it has yet. And I'm with Andy. As much as we'd like to think they're just tanks and you open the tap and the production comes back, it doesn't. If you have curtailed your production and you've closed things in, it does take time for them to come back. They don't always come back like they were beforehand. And they require a bit of work to get them back to the levels of production that previously had. So it takes time for this to happen. And you need to be confident that that market's there and that price is right for you to get the work and investment in to do it. So I think this is something where there's a bit of a lag from when the curves have been eased to the production being ready to meet the new levels. And so I don't think it's time for them to move it. My opinion, they'll keep going the same thing because I think it's been successful, and I think production will rise to meet it. It just takes a little bit of time and some investment and some work to get that. But I think it will be filled.
Most of your oil in Oman and the region as a whole, I suppose, in terms of the biggest customer, is China. What is your own experience from the point of view of getting your barrels into your customers in China? Is it all moving normal? Everything, lots of buyers, or is the noise about China's slowdown? Is it overcooked? What are your own experiences and thoughts on that?
So from no change from our experiences. Everything is as per normal with demand as we've seen in the past. No changes there at all. I think the impact of China actually is subtly different. We're seeing it more from a supply chain perspective rather than actually a purchasing oil perspective. So there is an impact on us, but certainly not on the sales side.
Kate, we do have the big narrative of the rising interest rates, the tightening cycle, and obviously Wall Street on the Fed is expecting multiples 5 rate rises now. But now the UK also is actually not is expected to actually take a rate rise this week, and whereas the US is still talking about it. Where do you see the impact of that tightening cycle? Is it a potential risk to this market?
I don't think the UK alone is going to pose any potential risk to any markets. But yeah, again, they're talking about raising national insurance contributions, adding to the paid. I've just done my income tax, so that's quite frightening. No, I don't think.
Come back to Dubai, Kate. All is forgiven,
I have been thinking about it. Seriously.
Well, I've had two friends who've returned recently who fit into your
Yeah.
profile.
It is very tempting. Yes, there was a TV program recently about Dubai, and it's very glitzy. But again, you
Although
look at-
overnight we've just announced taxes for the corporate tax for the first time,
Yeah,
10%.
corporate.
Yeah, corporate.
Thank
Yeah.
God I'm not a corporation.
No.
But no, it's getting harder and harder. I think even the producing countries that have the capacity, that are I think ADNOC is going to spin off one of its subsidiaries in order to raise funds. I mean, there's a lot of change, but again, it's going to be down to the NOC, the national oil companies, to invest in new capacity. And this is the time when they can do it. I think what we're doing is probably setting up a sort of future, the investment climate for national oil companies, not so much for the international energy companies, which are sort of being starved of cash by the financial community and the environmental pressures. So it's probably it justifies the fact that Saudi Arabia, that the UAE, that Qatar, for example, investing in new gas, and when everybody said, oh, there's not going to be that much demand for gas because it's not as clean a fuel as everybody thought, which is why the Qatar Emir is in Washington, being considered a non-NATO or close ally by the US, which is quite a coup considering where Qatar was a few months ago. So it's a rehabilitation of Qatar and a recognition that it does have a part to play in sort of, global energy security. But again, do they have cargoes that they can put immediately onto the market? They don't. I mean, it's a very, very tight market, and LNG will follow the money. If there's more to be, if Asia is willing to pay more for LNG, it's going to go there. So.
Andy, you said earlier I think you said, or was it someone else, that there is a narrative that the second half of this year the price comes off. Citigroup are probably the most bearish on that. But this sort of slowly this will come back. It does appear that as OPEC Plus runs out of spare capacity, that new capacity from the Permian and from Guyana and wherever else doesn't seem to be rushing to be on time, maybe Iran, but ultimately a softer second half of the year seems to be a question mark. Your thoughts on that?
So I think it very much depends on whether the demand keeps going up more than anything. So I think there are some things that could happen in terms of supply, like Iran coming back. Everything else is going to be relatively slow, as Kate said, and Richard mentioned in the chat. The environmental policies is making it more difficult for some of the producers to get access to capital, to put investment, to bring new production online. So you're going to change the portfolio of people who are going to be producing. So all of that is going to delay and reduce how quickly people can bring new production, especially online. So you really need to look at something like Iran coming back on in a big chunk to soften in the back end of the year. But that almost requires demand to be flat as well. If the world economy starts continuing to grow, then yes, it might soften a bit, but it's more like we're going to start kind of peaking. We're going to turn over a little bit rather than come down. So I'm not sure that we'll see a drop in prices. Yes, maybe a perceived kind of softening in terms of the market tightness, but I can't see us really seeing a downward drop because of anything fundamental.
Let's go to the survey question and see where we're at, the view of the room on this OPEC piece. OPEC Plus fails to reach production targets in January again. They got about half of the 400. Should the group continue with announcing increases they can't fulfill? Should the group continue with announcing increases that they can't fulfill? That is the question to the room this morning. On that point, Walter, the outlook for the second half, the idea that there will be new supply coming into sort of soften the second half of the year. What's your own view on that? It would appear that the capex that wasn't spent in recent years is coming home to roost now, even though you said at the top of your commentary that this is a great time, but as it does take time. Do you see that tightness continue through the year?
Look, I do, and I'm with Andy. I'm not sure Iran coming back would make a huge difference to the market. I think they were about 2.5 million barrels a day when sanctions hit. I don't think all of that's going to come back in a hurry. Now they may have a big boost to the market, but we're not going to get 1.5 to 2 million barrels back just like that. It just doesn't happen. So I think it is going to. Personally, I believe there is going to be this tightness, assuming demand continues to grow as the economies recover and people want the energy. I think it is going to be a market where prices will stay high. I think for the industry, that's something that we need to be investing in to meet. But access to capital is a challenge for people right now. It's not as straightforward as it was to get money for the oil and gas industry. And that was part of the answer I gave earlier about if you have the ability to. Even if you have the ability from a technical perspective, you may not have the cash to do it, and getting that can be a challenge. So I do think, to Kate's point earlier, it's the NOCs that are really going to drive this going forward, I think, rather than the independents.
Let's get the survey results and give Kate the last word this morning as to what the view in the room on OPEC. Yes. Should the group continue with announcing increases they can't fulfill? 2-1. Yes. Kate, the group, as always, OPEC plus, OPEC and now OPEC plus, which is essentially times 2, 20 odd countries, finding continued solidarity. I'm wondering your outlook on that. The stress of the Ukraine, obviously, potentially worst case scenario there could be quite damaging. Perhaps, put Russia into the same sort of sanction box as Iran. Obviously, there's regional issues here in the Gulf. Missiles coming from Yemen into the UAE never happened before. Where do you see the outlook for the stress within those group of very disparate countries?
Yeah, I don't think it's really going to have much impact on the sort of dynamic within OPEC plus. The sort of relationship between Russia and Saudi Arabia, for example, is the one that's key. And they haven't been very vocal about the Ukraine issue. If you look at the papers, they report it, but there's no, they're not whipping it up. So I think, if you look at it, the market inventories are low. They need to be replenished. Spare capacity is shrinking. You've got revisions to people's capacity. There's even questions about Saudi Arabian capacity. If you look at the neutral zone and how much is being produced, where do you get that 12.5 million capacity from? The numbers don't add up. You've got the IEA revising down Iraq's production capacity, because one of the countries they singled out was going to be, bringing on the most capacity of all the OPEC producers. So I think you do have there's more demand side uncertainty than there is supply at the moment, I think. More supply side uncertainty than there is demand. And, if demand proves to be stronger, then you are going to have a tight market for the rest of the year, with maybe ups and downs, a bit of a surplus in the first quarter. But, the heating season hasn't really kicked in yet. We're still expecting some, cold weather. And if it comes, then I think we are going to have higher prices.
Well, we have higher prices today with the new Brent contract trading on February 1st, knocking on the door of $90, and whether it makes that last sort of ascendancy to the big triple figure, we will have to wait and see. Will it happen this month, or will there be some, despite all the optimism about that demand strength that is in play at the moment, is there a surprise from somewhere, like a 50 basis point increase in rates, first increase by the Fed? Would that shock this market into an economic wobble? We will have to see. Thank you very much, Walter, for joining us from Muscat, Kate from London, and Andy from Dubai. Great to have you all back at the table on this February 1st. We look forward to the month ahead. Best of luck, everybody, and have a good day. Thank you.
Thanks.